Good afternoon, everybody. George Cavaligos for HFT Bonds and Notes. A little bit higher today, led by the 10-year, which usually isn't a bullish sign, but it is in this time frame that we're in now. I think we see some higher levels. You know, I had one decent trade early this morning, and then I tried to sell it a couple times this afternoon because the bonds actually do have, on a short-term chart, a little bit of a lower high at this point, but we never got any downside follow through and ended up scratching that silly thing and going to take off. I don't see much to do here. I think we get some higher prices again. We're still squeezing some shorts. We looked at the JP Morgan survey this morning. Big jump in the short positions for active treasury traders. A little bit too big. So I think we need to, squeeze some more shorts here, I think. And so far, we really haven't seen any drops in open interest. We've had 2 days of rallying, and open interest has been up, telling me that guys are still short in this rally, and we probably got to go a little bit higher here still. We're almost back to where we were on the 10-year just before the unemployment number came out, right around, 126 even area. A lot of low volume prints up around 125.22. We got up to 125.18 plus today. I wouldn't be surprised to see us trade a little bit higher. Some of the fib retracements popping up around 125.23 on the 10-year. Bonds really lagging today. We kept looking for a trade up towards 133.28. The fib retracement up there, we never quite got there. We made, I think, higher highs this morning as the market was trying to rally in the bonds twice by 1 tick and the third time by 2 ticks. So, I don't know, that's rangy, reeks of range, reeks of more short covering. Sideways to higher kind of trade, I think, is the plan for tonight and tomorrow. Tomorrow brings the 10-year. We do get a couple of things overnight tonight. BOJ minutes are out. There's also the China trade number. And then tomorrow we get the 10-year auction and the FOMC minutes. And then after the equity close, Chairman Bernanke speaking. I think he's speaking about the Fed's ability to predict things. It's pretty poor if you go back and look at it, but we still listen to him. Moving on. Again, I shot out a couple quick levels there. Let's go see what those levels look like on the upside. And start pulling your stops up. If you're long, pull your stops up pretty tight here, I think. And if you're looking to put some shorts back on, I think you can work some sell stops below some support levels if we start taking out some, some of these short-term support levels. I don't think we should see the bonds and notes trade much below, 125.0809, and on the bonds, I don't think we should see them trade much back below 133.08, 0608 if the market's going to continue this sort of slow, grindy to the upside trade. Have a great night. See you tomorrow morning in the email.